Uber versus Lyft, or more appropriately, Uber stock versus Lyft stock, is the topic of today's presentation. And we're going to present this from the perspective of somebody who has never looked at these companies in terms of their investment potential, but simply utilized these services, and they've proven to be invaluable. So what many of you might not know about me is that when I'm not spending my time as a corporate slave or now working for Nanalyze, I spend my free time scouring the corners of this planet for adventure. So I've ridden in taxis in more places than you can shake a stick at, and I've learned some things about this mode of transportation. So first of all, meter device companies, they build the shoddiest hardware imaginable. In other words, most of them don't work. So when you get into a taxi in many countries, the taxi driver will say, yeah, the meter doesn't work, and that's all bullshit. Usually if you challenge them on that, they'll turn it on and you make kind of a joke about it. If the meter does work, get ready for the scenic route. So you ought to have some idea of where you're going, and now that you have a Maps app on your phone, you can download that offline. That's one of the first things that you should do when you go to a new place and you're going to use taxis. If they don't know where you're going, they're going to pretend like they do. So every taxi driver just wants that fare. They just want you to get inside the vehicle, and you better make sure that you agree on some sort of a price before you get in. But their goal is to get you into that vehicle, and that's another reason why you ought to have an app with maps on it. Be careful about buttons under the seats or on the floor that accelerate charges. So these will happen whether you're moving or parked. I've seen them moving in Eastern Europe. I've seen them parked recently in Shanghai, of all places. One thing that they'll sometimes do in the more emerging markets, they'll drive you to a remote location and then act confused. And then when you point out where you were going, oh, you're going there. And suddenly the fare goes up 3 times. Picking up passengers en route, this happens a lot. Usually that's with the goal of selling you something, hopefully not robbing you. No taxi driver carries change. That's a rule that is observed in every country on this planet. Taxi drivers don't have change, so you better bring something that's close to what you think the fare will be. If the country uses multiple currencies, be careful, because then there's going to be confusion. Oh, I thought you meant this currency, this number. Even if you agree on the price, you may not have been misunderstood, so get used to that, and they might kill you. I still have a scar on my nose from an interaction with a taxi driver in Budapest. It was kind of a interesting story there. So taxis can be a very difficult part of traveling, though there are some good people, and I've had good experiences. They know the underground well, and they're good for inside info. So taxi drivers are of some use, but generally speaking, taxis are one of my biggest pain points when traveling. That's where Uber and Lyft came on the scene. And now Ride on Demand, it's available in most countries. And that's because there's no barrier to entry. So, and it's not necessarily Uber and Lyft. You're going to find variations of this theme all over, because anybody that can develop software can cobble something together. Usually what you'll find is one provider, whoever that might be, is most commonly used. And maybe there's some stragglers. What you'll also see is that local taxi companies or mafia make it very tough to enter some markets. So don't be surprised if you go to a particular place and the person picking you up, it's usually at airports, will say, don't make a big deal out of it. Just get into the passenger seat alongside them, not the back seat, and pretend as if I'm your friend picking you up. I've done that in numerous times, because they don't want to be seen as a ride-sharing company, because then they'll get harassed by the taxi drivers. So you'll encounter lots of local providers you may never heard of. But now what's happening is that Uber is taking a lead across the globe, and they're the lead ride-hailing app by far, somewhere around 75% market share, I think. Founded in 2009. And they quickly became the world's most valuable startup. So these days, you don't hear too much about them. But back when they were a startup, they were one of the most valuable. Their disruptive business model, explosive growth, and constant controversies have made them one of the most fascinating companies to emerge in recent years. We've never covered Uber, and I was quite excited to take a look at the company. Before their IPO, they were valued as much as $120 billion. Today, they're valued under that at around $106 billion. So you're able to invest in a company that's accomplished a lot since then, but is at a lower valuation. Uber has been working on becoming profitable in part through the acquisition of other companies, so there's a lot to look at there. Now, when we look at Uber versus Lyft, you see here that both companies IPO'd roughly the same time, so in May and March of 2019, and you can see the current market cap compared to their valuation at IPO. So Uber is priced at a 29% premium. So what you could do is look at the overall market return from that date and see if Uber has outperformed. I didn't look at that, but what it comes down to is that you're paying a 29% premium over that IPO, and they've accomplished a lot since then. For Lyft, you're getting a significant discount, and whether that's value or a value trap, we tend to think it's the latter, so we're going to take a closer look at that. But when we look at these two firms, and here I've plotted their revenues over time, you can see where the IPO was there. You can see the shock of the Rona, which hurt both companies quite significantly, though. Uber had, I believe at that time, had delivery, which helped them a lot, right? Because even though ride sharing went down, they still had that delivery, which went up. And you can see the explosive growth of Uber's revenues compared to Lyft. And this is one of the reasons that we invest in leaders. So leaders have better access to capital and cheaper capital. And what I've found is that in some developed markets where these on-demand business models are catching up, so they're not fully there's still a race to the front for the competitors in a particular market. I think Indonesia is a great example of a place like that. When there's no barriers to entry, what you'll find is that the person with the deepest pockets usually wins, and they'll spend a lot of money until their competitors run out of money and go bust. And then once they get some scale, of course, they enjoy economies of scale. And what you'll find in ride sharing is that network effects matter for this particular business model. This was taken from the Uber S1, and it's an excellent diagram. So start at number one. You have driver supply. When you have more drivers, there's lower wait times and fares, right? Because everybody's competing for those fares, and there's more availability of vehicles around. When that happens, you have more riders, and more riders per hour is higher earning potential for drivers. They make more money. More drivers want to participate. You have higher number of drivers, lower wait times. You see how that circle works. That's called a network effect. And for ride sharing, it works particularly well. Now, the question we wanted to ask today, is there value left in Lyft? There might be. Some options if you're Uber. So in terms of how these two companies, the only two publicly traded ride-sharing companies that are relevant, how they're competing. If you're Uber, you can let this thing die in the vines. You can say, you know what, we have more money than Lyft. Eventually, they're going to run out of cash. They're not going to be able to compete with us, and we'll just run them out of the market by out-competing them. Or they can say that once Lyft's assets become sufficiently distressed, they'll pop in there and purchase what's left, since the shareholders of Lyft won't have very many options. Or they can go and acquire Lyft at a premium to existing price. That doesn't seem likely. Now, when you look at Lyft's options, the number one goal of every business out there is to survive. So that's what Lyft is focusing on. Now, what they could do is expand into geographies Uber is ignoring and entrench themselves. I thought, having not looked at either of these companies, that's what Lyft was doing. That would make sense, right? So that would put them in a position where an acquisition by Uber would make better sense. Unfortunately, that's not what they were able to do. But what they could also try to do is grow through creative business model configurations. You see them doing that. So they have this Lyft Pink, this subscription model. It's not that creative, so it's similar to what Uber offers with Uber One. But then they have this Lyft Business. It's a business travel program where employees have the ability to separate their business and personal rides in the Lyft app. Doesn't seem overly creative. What they should have done is put together a set of different business offerings similar to what Uber did with ride sharing and delivery and freight. Instead, when you look at Lyft's revenue breakdown, you see here revenue from contracts with customers. So that's their ride sharing. And you're reading that from right to left. So you can see the revenues are increasing there. And then rental revenue appears to have plateaued from year over year there based on last quarter. And that rental revenue is primarily from Flex Drive and their network of light vehicles. So this is where they offer affordable rental cars for Lyft drivers. It's a good idea, but doesn't seem to be making them a ton of money. Now, when we look at Uber's revenue breakdown, here's a company that's done it right. You could read this from left to right. So you see they have mobility revenue. We know what that is, ride sharing, delivery. So that's the Uber Eats component. There's probably more to it than that. We haven't dug into that yet. Freight revenue appears to be going down, and it's not just this quarter, but it's been on a decline. So that's probably one of the things we'd want to examine on a deep dive into Uber. And then you can see here their revenue breakdown in terms of geography. So they actually have some proper diversification, and you can then look at the independent growth rates, and you see United States and Canada declining year over year. That's likely going to be from that decline in freight, though we'd have to dig into that to see. Now, here's what matters. Going back to that point about Lyft surviving, it's cash burn. So you ought to be able to guess which is which here. The table on top is Lyft, and it looks like they've just barely last quarter eked out a positive operating cash flow. What this means is that their business isn't consuming cash. So we haven't looked at the amount of cash that either company has, but if you're a business like this, you want to be producing cash so that you can reinvest it into the business and grow as quickly as possible. When you're consuming cash and you have to raise capital, this isn't a good environment to do that in. You don't want to be put into that position. Look at the table on the bottom. So the operating cash flows last quarter for Uber were close to $1 billion. And that's going to allow them to take that money and put it to good use. You can see they have around $5 billion in cash and cash equivalent short-term investments. They have plenty of money to invest in growth. But here's what's interesting, these equity stakes in the center here. So maybe Joby aside, the rest of these, and perhaps Aurora, look fairly interesting, Grab and Didi in particular. And you also see here that they have ownership positions in other companies as well. So I think Lime there is another company that's doing the scooter sharing and what. I've used Lime all over the place. It's a great idea for somebody that's using the model, and I read recently they actually were able to achieve a profit with it, though the last time I used Lime, I think that was in Qatar, it was fairly expensive. Now, what I find interesting about Uber is that across the globe, there's some very interesting delivery companies and ride-sharing companies out there, and two of those would be Gojek and Grab in Indonesia. We did this piece, an Uber for motorcycles and so much more, where I went and talked with drivers. So those two individuals you see there, these guys are quite interesting. So they're working for competing companies, but they're quick to swap jackets. So if there's an order that comes in for Gojek, then they have both apps on their phone. They'll pop that jacket and helmet on and go drive. And then if it's the other company, so they're mercenaries, right? And they work for whoever's going to pay them money. So eventually it would be interesting to see, and we know that Uber has picked their side. It would be interesting to see how these two companies are faring. And if you're an investor in Uber, then I think looking at where they plan to expand to and those opportunities are quite interesting. When you look at their latest investor deck, you see here Uber is now launching taxi products in New York City and LA. Though this is a great idea because they've been running into a lot of problems with taxi companies across the globe, and now they're offering a taxi app, and it says here that it gives riders an upfront fare while sending more demand to taxi drivers. So that's rather clever if that works for them. And of course, Uber One, their monthly membership bit here, they've released that now in 18 markets, and presumably Uber, the last time I read, was operating in 68 countries. It's probably more by now, but look, they're also doing advertising. So in-car tablet advertising, new U.S. markets, and post-checkout ads on Uber Eats internationally. So they're doing a lot, and it's a very interesting business. It doesn't appear to be overpriced. So with a reasonable, simple valuation ratio of 3, it's below our catalog average of 6. I'd be interested in examining their adjacent verticals, delivery and freight, to see what sort of potential TAM there might be. Of course, ride sharing as well. How saturated is that, especially globally, because there's a lot of markets they can expand into. The on-demand market, I think, is massive if you're throwing in delivery and freight. So This Uber versus Lyft will make a great case study for MBAs one day. I think it's a great example of capital and the access to capital providing leverage that helps you grow, and the power of network effects. So we may cover Uber in a future piece, but what you can do to help us is please like this video, subscribe to our channel. Should we put out that Uber video, you'll definitely want to watch it. I've put up another video here that you might want to watch. Before you click that, please click the Analyze logo on the right, subscribe to our channel. Thanks so much for taking the time to watch this today.